Okay, traders, today is Thursday, August 27, 2009, and the purpose of this class is to show you that even when you are in a bull market like the one illustrated before you here in the NASDAQ, you still have to be a seller on certain days, or at least sidestep the market on certain days, let it come down to a pullback area, and then buy this area. Now, the last couple of YouTube videos are out there stating we are buyers of dips, we want to be long, and of course, what do we do Wednesday night going into Thursday? We go short, and lucky enough, we sell it very much near the high price in euro currency, and close enough to the highs in S&P to catch a nice downdraft. Now, I'm not being a hypocrite here, traders, because yes, absolutely, Omni is a buyer of dips in the overall picture. And the overall picture, a dip is something like this, a dip. You buy into a dip. Another one, you buy into the dip. If you see a dip, you buy into the dip. If you recall, this do or die area by this dip was something that we did in a video for you only 5 or 6 days ago. We put this out and said, look, we're on our way down on this day here. Let's get long. It's a do or die area. And the market rallied. Then in, I believe, the last video that I did for you on YouTube just 2 nights ago, the video was done on Tuesday night for Wednesday's trading, I showed you this channel right here. And I said that we are in a secondary channel, bullish channel, within a larger big bull channel. So this purple pink looking one here, magenta maybe it is, that was the smaller secondary channel I was referring to in last night's YouTube video. And if we break it, we would drop. We're in a larger uptrend, a much larger parallel, which I like very much, and I will buy the dips when we test the bottom line here. But we are day traders. In our day trading style, we violated this right here, this channel. And once we violated it, I assume the next step is we're going to come down and test previous resistance, which is now support. And most of that was talked about in the latest YouTube video. So let's continue on. Oscar, why would you be selling it when your last couple of videos said we need to be buying? Once again, we do need to be buying. We certainly need to be buying dips. But when you're in a channel like this and you break down out of that channel, the next thing you have to do is look at your indicators and see if they agree with a breakdown. Let me see if I can keep the channel up at the same time. Let me see what I can do with this screen here. Okay, you have the channel above right here. So there's your channel, and then we start to break down out of the channel. So what I do then is I start to look at my indicators and see if they agree with some form of a breakdown. And lo and behold, the first thing I pull is the CCI, and yes, it agrees with some form of a breakdown. So remember, traders, I'm doing this analysis. Let's delete what happened today. I'm doing last night's analysis. Here we are. Basically, if I made this channel lighter, you'd see that we settled lower than the channel. Right there. We settled lower than the channel. In my mind, it looks like we're falling out of the channel. I'm just going to make that darker again so that you can see it in the video. So in my mind, I see that we're falling out of the channel, and then I go to my indicators. So my CCI says, well, yeah, you are falling out of that channel. Be careful. And then I pull an RSI, and it looks to be doing almost the same job on us. It begins to falter. Instead of going straight up, as it had been in the past, it starts to falter a little bit, giving me another reason to think the possibility of a pullback, which we'd like to buy into, of course, is coming our way. So then we pull another indicator. And this indicator is the WADX, or Average Directional Movement Indicator. This one right here. This one as well is pointing towards the downside. Now, traders, remember, this homework's being done before today's movement. Watch what happens to this indicator if I add today's movement in, which I'll do right now. You see how the indicator changes, and now it's absolutely more of a sell signal than it was last night? So you certainly do have to anticipate what's coming next if you know how to read your analysis and read your indicators. Okay, so if I remove today once again, now you see what the indicator looks like. Let me remove today, and it should change very quickly for you. Boom. See, the indicator changes. And now the indicator, yes, is bearish, not as bearish as it looks, being that today we're trading right now on Thursday morning, and a lot of the dip has already happened. So when you pull your indicators and they confirm your suspicions that it looks like you may have a couple of down days coming, you have no choice but to react to that. And how I mean to react to that is, if you are a buyer of dips, you either sidestep this market and wait for a dip to buy it again, or you find the spot where it looks like it will fail and sell into it. And simply, that's what I did. I said, well, what should happen here? We should fail somewhere by the resistance and then break down. So I looked for where we would probably hit somewhere near this channel, and then I called for a short up there, and lo and behold, again, we'll add today back in. And as you can see, it started to get near the channel and it fell apart. So that was the reasoning behind why I went hunting for a short over a long on Wednesday night for Thursday's trading. But there's more to that. That was just the NASDAQ. And of course, I start with one. It gives me indication where I should be looking high or low or up or down. And then I start doing homework on more markets. So then I pull my second leader, or I should say the leader of the markets, which is the Dow Jones Transportation Average. Showed you the NASDAQ, one of the leaders, no doubt. Now we're looking at the Transportation Average, which certainly is a leader. The Transportation Average did something interesting. It led first because yesterday it had a down day. And then today it went further. So yesterday it actually showed us that it wanted to lead the way down. And then I basically expected that support will be tested as we drop lower. And your next simple support line would be this one right here. You connect this low to this low and drag it out. And lo and behold, we broke that support line. Now, the support line actually hits 3 valid points. And traders, your support line should hit minimum of 3 valid points, or 3 different days if you're on a daily bar. And you actually have 3 hits right here. There are 2 in a row there, almost 3 in a row, and this one here, and you just miss up there. So it's a decently valid line. And I noticed that we're going to test that today. So I expect that, there's going to be some downside coming, but that is not my only reason. Just want you to realize that the Dow Jones Transportation Average seems to be regaining its century-long role as the leader of the indices. It dropped first. Yesterday, it put in a straight down day and settled by the lows, and today, no question about it, went straight down. So our leaders are doing their job leading. And they were leading towards the downside because if you look at their indicators, no doubt, they're quite bearish. And nice to see that our leader led the way in the indicators as well, because look how much deeper this indicator is on the downside as compared to the NASDAQ. In fact, if I remove all of today's action, watch that indicator still. In fact, let's do something before I remove it. That indicator went all the way down to this arrow. That's including today's drop. Now, if you want to see what it looked like last night when we came up with this trade recommendation, I will remove today's bar, and the indicator was up here. But it turned decisively and began to drop. So I said, okay, the leaders are certainly starting to point towards some little pullback coming our way. The other indicators look very much like it. They are very bearish looking for a quick day trade. Again, I will add today back in, and we come back down on that indicator to that arrow. So indicators and the 2 leaders of the indices are telling me, Oscar, you may want to be a buyer of dips, but don't trade your opinion, which I never do, by the way. Trade what you see on the charts, and that's exactly what I did, traders, which is why my arrow went from green to red, downside from Tuesday or from Wednesday to Thursday. So let's continue because there is more to this story. The reason why we are buyers of dips overall is because, as you can see, very large inverted head and shoulders as we bottomed out in this market from 2008 into 2009. Head and shoulders, V bottom, looking good, starting to test or try to get above the resistance. You gotta like that. But there's more. That's the transportation average. Let's go look at the Dow Jones Industrial Average. Dow Jones Industrial Average doing something I was expecting, and I'm very glad to see it happening. Remember, support gets tested, but usually support starts off as resistance. This was a resistance line. We could not get through it when we got here, and it dropped. Maybe we'll do that with an arrow. Let's do that with an arrow, traders. Make it a little clearer for you. Okay. Right here, resistance, and the market has a pullback. Then it gets above that resistance, and then I expect a test at some point of that now support, which was resistance. But it's not only resistance right there, it's resistance here, it's resistance here. And I assumed because we were so volatile back in this area, you can blow through the resistance once or twice, and it's still going to be valid. Extremely volatile action coming out of 2008, as you'd expect. So back here, these valid points that I used to come back now and find resistance is also now my support, and I'm expecting to hold somewhere in this line. We'll find out. We'll let the markets tell that to us. But I'm expecting that we'll hold this line as support. More than that, though, I was expecting to get down to the line, which is another reason why we were looking to sell this market. And, of course, indicators on the Dow are no different. They look quite bearish. As you look at the CCI, Commodity Channel Index, all the other indicators are quite bearish for day trading. But there's more. I want to go look at the SPY, or the spot cash S&P chart. Same thing as same thing as the E-mini, and same thing as the big S&P, except for that it's the cash market, so it's about $1 difference in settlement price each day. But the chart's going to be the same as your ES or your S&P. Traders, there's a reason why I am a big fan of being a buyer of dips until the market tells me to do something other than that. And the reason is, look at this inverted head and shoulders, the big one first, the big circles. Inverted head and shoulders. Inside of this inverted head and shoulders are more inverted head and shoulders. Okay? 1, 2, 3. But this is an upright head and shoulders. Point is, at the bottom of the market, the whole bottom right here, this whole banana, showed us a huge inverted head and shoulders, and then lots and lots of smaller head and shoulders within the head and shoulders. That you'd have to call bottoming action. And why would I say that you'd have to call that bottoming action? Because if we go back to 2007, you will see that the top looks exactly the same. Look at the top up here. Hopefully I can go back far enough to show this to you. I just loaded 4 years of data in. Maybe this will take us back further. Okay, once again, the picture you're looking at is where we are up to the moment. Big bottoming looking action because you have a V bottom, up inverted head and shoulders, big ones, and lots of little ones within the big ones made me start calling bottom. Let's go back now and look at what the top looked like. And there it is. Boom, boom. The top. Huge head and shoulders. Huge upside down V. There's another head and shoulders in here. 1, 2. And then you can actually take this and make it a little larger, and it's a shoulder to both head and shoulders. So what you have here is a huge head and shoulders defined by the big circles, and then lots of little head and shoulders within the big ones. And traders, this was 1576. Actually, 1577, I believe, would have been the high here. This was that spot where we started calling for something looks fishy here because the market put in a huge top-looking formation. In the top-looking formation, again, you got a big head and shoulders, upright, with lots and lots of other head and shoulders mixed within it. Okay, so if that did bring us to top, and traders, no doubt, because we never look back from there. Look at how this chart breaks down after that. It continues to break down and continues to break down, and what does it do? Gives us that same look, but upside down, when I say it's putting in a bottom. That is why, overall, I am a buyer of dips, because I became a seller of rallies at the top of the market and have eased into being a buyer of dips at what we hope is the bottom of the market. Does everybody see that, and is it clear to you? It couldn't get clearer if you ask me. I mean, that is a picture of a top and a bottom. The beautiful thing about it is we've called these tops and bottoms before the market ever actually did drop in YouTube videos and classes at the site. We called the top. We've called for a bottoming action. It is happening. That is technical analysis working, traders. There's no magic wand here, no crystal ball, no seeing the future. There's technical analysis. All the fundamentals come out in these charts first. So all you have to do is read the charts, and you should know what's coming next. All right, that's the broader picture. Back to why we took a short today. When you look at this chart, and now I will blow it up a little bit so that we can see what's happening here and now. Here is what we're looking at now, traders. And here is what I was expecting. I'm trying to pull this chart in so you can see, okay. Right here, once again, we have what was resistance and turned into support. Why it was resistance is because when the market tried to get above it on this day, it failed. It did have a one-day pop here, but when it tried to get above it on this day, it failed miserably, and then the market really broke. On the way back up, it failed miserably here. So it's valid resistance, right? Well, if it's valid resistance and we're above it, it should become valid support. Another reason why I was expecting a test of our support zone. And let's just turn that arrow up. Okay, so we expect this to get tested. We expect it to likely hold or maybe get penetrated slightly, and then the market should move higher. Once again, if we take our simple trend line and connect it, we have a little room on the downside to break and still be in the support zone. So why not look for a downside trade? It's exactly what I looked for, and it's why we went short today. Of course, the indicators would confirm that this move was coming. As you can see, all the indicators that, in fact, traders, every indicator I pulled last night on every indice around the globe was bearish. And I thought and said, well, you are not buying the market today. You have no choice but to sell it. Traders, an illustration of how I truly do stick to trading what I see and not my opinion. Because we all know by now I am of the opinion that you need to buy this market, but I am not going to trade an opinion. I only trade the buy signals when I see them or the sell signals when I get those. Overall, I'd rather trade the buy signals and more aggressively, but I will trade whatever sets up on the charts. Now, why would I go against my own opinion? Well, first of all, I'm human. What does an opinion matter? We're human. The markets are right. Humans are wrong, and we try to read the markets correctly. So right off the bat, I might as well follow who's right, the market, over who is guessing, the human. On top of that, you have a market that might actually turn into a bear from today forward. How would I know if it's not going to, right? I have absolutely no way of knowing if this isn't going to become the bear. So if I stick to an opinion, I will be buying as a new bear begins. If I stick to the analysis, I will be short when the new bear begins, and my opinion might get bruised, but my account won't. More importantly is that our trading is profitable and on the right side of the market, and our egos can get stuffed into a closet somewhere. So that's why I immediately turned and said, well, you have to go short here, Oscar, because what if this happens? What if in the next 3 days we're down here and the new bear began? There I would be standing in front of a camera going, never trade your opinions. This is a bull in front of a bear market. That's not my style. My style is simply to call the market for what it is, the way I see it technically, and don't worry about what I think. Of course, what I think is that you got to buy dips. I am not buying any dips unless the dip materializes, and the analysis tells me, green light, go buy that dip. So I am here to illustrate how I absolutely stick to the analysis. I stick to my guns. I stick to my trading rules. And I stick my ego and my opinion in a closet somewhere. Because I don't want to hear from either of the two when I'm doing technical analysis. I hope that this illustration of why we're short today and why I decided to take a 1 to possibly 2 day look at the downside is clearer to you. Does this help clear things up, traders? Because if you were simply just a YouTube fan and were not here at this class at my site, you'd have to scratch your head and wonder why I'm short right now. Well, this is why. Because I'm a day trader. I don't control markets. I trade what I see. If it says down, thank you, sir. Elevator down. If it says up, well, hey, we'll go up. I certainly won't tell it where it's going. It'll tell me. Okay, traders, I think I'm going to leave this class right here. I think you have enough that you can go do homework now based on what you've just seen. And you should be able to recreate or reconstruct the reasoning why from Wednesday night or from Tuesday night to Wednesday night we flopped from liking to buy the market to liking to sell the market. However, we're only selling short term. We're looking to get out as we did today. We got out quickly with our profits, and we will await a pullback where hopefully we can safely get long once again, because in no doubt in my mind that this is acting like a bull market. Look at the way that line goes that I just drew. Starts at the bottom left, heads towards the top right. Simple 101, bull-looking market. Okay, traders, thank you so much for coming to class. And let me end with this. Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.